What's up, YouTube? It's Joe Ketchapalia sitting on the couch making some money investing in fractional real estate online. As usual, today is dividend day on ARK7, so I'm going to give you a little update on just go through their portfolio performance update, but then also share my portfolio and how I personally did relative to them. A couple of things there, 4.36% annualized dividend rate across their entire portfolio. It's a good, early on when I talked about ARK7, I mentioned lots of different times that I'm not very impressed by them. They're just their stated yields, the dividends that they're providing are just very low for, compared to what I'm looking for. And you can see, 4.36%, that's in line. Now they did mention, we've got our top performers are 7.05, 7.32, and 7.69. Those are their absolute highest yielding deals. This is one of the reasons why, like when I'm talking about Mogul and I'm like, well, their new deals are lower, they're projecting lower yields. All of their projections are still above, if they hit them, they would be top performers on this platform. Now, of course, they have to hit them. But my pad splits on Mogul are almost all doing significantly better than this 7% range. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on all those platforms. Just because I'm sharing the links and letting you know about them doesn't mean that it's the right platform for you. You want to make sure you're doing your own due diligence, looking into what they're promising, what they're providing, and also digging into the deals themselves and making sure that they fit your personal investment objectives and strategies. Also in the description of this video, I have links to all the places, I have links to the Discord channel that I have set up. There's over 200 of us now, all fractional real estate investors, just talking about different platforms, different strategies, different properties, sharing our due diligence and all that sort of thing. Please feel free to join that. There's no cost. It's not a sales funnel. I'm never going to DM you and try to sell you something. You may get DMs from scammers or imposters that have copied my account. Please report them if you do. But yeah, please, feel free to join that and share in the knowledge base that we're trying to create there. Okay, back to this. Yeah, so, they have some short-term, although, one of the things that I think is really interesting, and I am just comparing it to Mogul because I do, I know a lot of you are investing on Mogul as well. ARK7, all their top performers are short-term rentals, or most of their top performers are short-term rentals, which is the opposite of on Mogul. All of my worst deals in my Mogul portfolio are short-term rentals. So I thought that's kind of interesting. I might put more of my short-term rental dollars on ARK7 because it seems like maybe they've just figured that out a little bit better. It may also just have to do with the time when they, how far back they purchased those, and then, the difference in basis, which I think is important, right? But anyway, so three of their short-term rentals, their top-performing ones, 7.32, 7.05, 6.37. Those are pretty good, and I do own a couple of those. Like I said, I'm going to show you my portfolio. I don't know, whenever they say the total dividends distributed, I don't know that anybody really cares about that. Their dividend performance trend, I do think is interesting, right? You can see how it's varied over time. They show you the very best performing property, what it's been, and that's always been somewhere, around 7.5 or maybe a little higher. But their annualized dividend rate, like average, it's never even gotten to 5%, right? It's somewhere in between this 2.5 and 5% line. So that's why I'm just not buying any of their deals at full price, right? Like the way that I'm making money on this platform is buying the discounted ones. And so then that boosts my yield. And in addition to that, I expect to get some sort of extra return when we sell because I had bought at a discount. They talk about the performance of their portfolio, 93.59% occupied. I've mentioned this every time I've covered ARK7's dividend report, and they have a very strong occupancy rate, and so it's good to see that. They just tell you the new leases, the turnovers, no new vacancies, no new operational events, notable short-term rental performance. Yeah, they're telling us the ones, again, that are performing the best. So that's interesting. They have no featured ones right here. They have it on the other page. But so then, okay, compare that to how I'm doing on ARK7. This is my portfolio, and again, I don't have a ton of money on here. I think I've got like $4,000 at this point. But so $20 dividend this month, not a ton of money, but 7.3% annualized return. That's pretty decent, right? That's better than my annualized return on Mogul right now, because all my short-term rentals are dragging my Mogul portfolio down too much. And you can see this is primarily coming from these two Atlanta properties that are short-term rentals, that are condos. Both of those are doing very well. You can see my yields are higher than what they're saying the yields are, and it's because I bought these at a discount. So the yield that I get on it is higher, which is why my average yield is so much higher than the ARK7. Yeah, and they compare it here, right? 7.32 is mine. ARK7 is 4.33. Like, it's just kind of, it's just a really good illustration of why you should only, or at least I'm only buying discounted properties on here. I'm not buying ones where I've had to pay full price. And so you can see, like, this is my actual, what is my total? Oh, only $3,500 because I have $800 in cash as well in here. I was like, why does my account say $4,000? So I only have $3,500 in properties. You can see most of that is made up in these two properties here, right? Which are those short-term rentals that I mentioned, both of which are have very strong dividend performance relative to everything else. I've got a decent chunk of this SoCal one, and again, pretty good dividend. These are the discounts from from their IPO. So the C8 I didn't get a huge discount on, but the C9, well, I think I did actually. So I think this is where it's showing the current one, not necessarily what I paid for a discount. And then just a little bit of this Tampa S7 and this Virginia C2. Yeah, I mean these, since IPO changed, very, very low. But I wanted to also point out, let's see, is that, and I mentioned this earlier in the week. So I put cash in right before I put this in so it would hit before today, because if you invest now in the next 2 days, 19 hours, 53 minutes, 51 seconds, when you invest $800 or more, you get an $80 bonus. I'm trying to take advantage of this bonus every month. It's basically like getting a 10% bonus for for buying, and I'm only going to do it if I can find deals that I like, right? I'm not going to just blindly throw money at it, but if I'm already finding deals that are at a discount, and I like the property to begin with, and it's, and the yield is okay with the with the combination of buying it with a low basis, and then I can get a 10%, additional bonus on top of that, like that's how I think on here I'm going to do real well. So I'm gonna, so if you haven't done that, that's one of the things to look at on here, but also just in general, right? Like if we're on lots of different platforms, there's times they're offering either bonus shares or certain different discount or bonus shares for buying within a certain time or buying a certain amount. Or like when I first got on Mogul, they were doing that, although Mogul doesn't really do it at all now. But from their Mogul, the Mogul Club I was looking at it, and I actually make, in most months I've made more money from the Mogul Club rewards than I've made from my rent on there. More in Mogul Club rewards than I've made from rent on Lofty, and almost as much as I'm actually making for rent on Mogul, which is just crazy, right? Because it's but it's because as people continue to invest in your club, and if you own a decent chunk in your club as well, you end up getting 2%, your share of the 2% bonus in all the new purchases. And because they're just pumping out new properties left and right, and people keep buying them, so there's a decent amount of money there. When I did the Real Bricks videos, I think if you watch those, the only reason I bought those deals are because of some of the bonus shares. The same thing with my most recent Collab purchase, right? On Collab, I wasn't super excited about it, but I bought more of the one that I had that was doing well, and just because they were offering some free shares. So I think that's, and it's the reason that we're getting that opportunity is because we're early adopters in this space, right? There's a benefit to, they're trying to incentivize us. But I want to just caution people, don't, just because they're giving you that deal, it doesn't turn a bad deal into a good deal, right? You might have ones where, okay, you're kind of on the fence about it. It maybe is okay, and that'll get me there. But I'm certainly not buying deals that I just think are objectively bad deals in order to get that bonus money. Like I'm not letting it sway me that much. And I think that there are some people where the bonus shares or bonus shares or different things like that are affecting them too much. So I just wanted to mention that because I've seen some discussions recently from a few members of our community that just think like, oh, well, it's free money. One thing to remember, that 10%, additional shares, it's only a one-time thing, right? You're not getting that every month. I mean, not every month. You're not getting that every year on that investment. So if you hold that investment for the long term, the impact of it is not necessarily going to be as great as it might, initially seem. Anyway, that's really all I wanted to share about this. I'm curious how everybody else is doing on ARK7. Oh, if you want to know how to get to that, if you go to ARK7 and you just click on this dividend report right here, and that's what gets you here, right? I'm curious for other people who are on ARK7, how many of you are you beating me, right? Put it in the comments if your annualized return is higher than mine. So 7.32, that's all you got to beat. 2, are you beating ARK7s, right? So if you're beating 4.33, I'm curious about that too. I would have to imagine that most of the people in this community are, because I think that there's a lot of us that if we are on ARK7, we're buying at a discount. But yeah, I would just love to hear it, see how everyone's doing on here. And if you're somehow worse than this, why is it? I guess you could do it like if you bought a bunch of S10 or something. I mean, it has a low dividend, or you just picked really poor performing properties. Yeah, I guess of course you could perform worse than the average. Anyway, let me know. Put it in the comments. Jump in the Discord. Either one. Until next time, I'm just going to keep making mistakes so that you don't have to.